let's say that Bitcoin can go from 100,000 to a million, so 10 times. MicroStrategy will go up more than that because of its Bitcoin strategy. If someone's buying MicroStrategy, they're buying it for their Bitcoin exposure. But Ethereum today is 4,000 roughly. We show that if Ethereum's price ratio recovers to its all-time high against Bitcoin, then Ethereum will outperform Bitcoin by 5 times. Okay, meaning if Bitcoin goes to 1 million, and that's 10 times from here, that means Ethereum could go up 50 times. So if MicroStrategy will outperform a 10 times rise in Bitcoin, BitMine will outperform a 50 times rise in Ethereum. So in a way, and these are the 2 largest crypto treasuries in the world. Yeah. The choice is really understanding that Ethereum is facing a positive innovation cycle that markets haven't yet recognized, because it's been for 5 years, it's been a chain that's been slowly improving, but now this is the moment.
Today, as crypto investors continue to speculate as to whether we'll see a price drop in Bitcoin and Ethereum in the coming weeks, this crypto cycle is heating up, and Tom Lee remains bullish, with a parabolic rise in the last few months of 2025. Forced selling, leveraged bets, and the usual tug-of-war we see when an asset approaches such a huge barrier. The bigger picture looks very different, though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. Bitcoin's price sits just under 116,800, still up almost 25% this year. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
One, if anyone's buying crypto, they have to use a long-term time horizon. So they shouldn't worry about the price 1 month from now, but they should think about where it is 5 years from now. And that's how we've always approached it. When we wrote about Bitcoin, we always wrote about prices 5 years from now. And that's why even today, I think Bitcoin can still get to 1 million. That they have to understand there is a huge transformation taking place on Wall Street, because AI and blockchain are really going to disrupt traditional Wall Street. And so they should really bet on a future where that innovation is going to take place. And part of it is Bitcoin, because that's where you store value. But a bigger change is on smart contract platforms like Ethereum. So to me, I think Ethereum is in a super cycle. Like, it's just the start of what I think is going to be a really explosive rise over the next 5 to 10 years. The stablecoin industry is the first really widely adopted crypto product. That's why we called it the ChatGPT moment. And stablecoins work really well. Merchants love it because they don't have what they call chargebacks, and the exchange fees are much lower. If a merchant accepts Visa payments, for instance, that's 2 to 3% of the charge is taken by Visa. And if there's a fraudulent charge, the merchant is forced to lose money on that transaction. There's never any fraud on a stablecoin. because it's a bearer instrument. Consumers like stablecoins because it's less expensive to carry a USDC than to have a bank account. And then the stablecoin issuer makes money on a stablecoin. Stablecoins also are big owners of U.S. Treasuries. In fact, collectively, they're the 12th largest holder of U.S. Treasuries. So it's a very good model for the United States. And I think banks have looked at stablecoins initially as, they didn't really like the product, but now that they've seen the adoption, they've become interested in issuing their own stablecoins. Stablecoins, I think, the primary distinction today is really U.S. compliant stablecoins like USDC and PayPal versus Tether. Because Tether is much bigger, but it doesn't operate in a compliant way with U.S. OFAC, U.S. regulatory requirements. Because in the U.S., in order to have a stablecoin wallet to receive it, you have to have done what they call KYC, know your customer. It's a standard anti-money laundering process. So all bank account, anybody who opens a bank account in the U.S. has to do a KYC.
Okay.
But Tether doesn't require KYC. That's why it operates so widely outside the U.S. 80% of all stablecoin transactions do take place outside the U.S. at the moment. So it's much bigger outside of America. But, today there's, in crypto, you can just use cross-chain. You can swap Tether for USDC into a compliant wallet. So there's interoperability. So JP Morgan, Goldman, Amazon, Walmart, they'd love to be in the stablecoin business because then they can capture the benefits of issuing a stablecoin. I think the strongest ones are going to survive. JP Morgan and Goldman, I think, are going to be huge winners from blockchain because they, as you said, they have enormous positive reputations with governments, with institutions. They have a brand that's recognized. And crypto is a way for them to re-engineer their businesses to save a lot of money. So I think that the biggest U.S. banks are going to become global winners in crypto. The stablecoin market's going to get competitive. So Circle is the biggest stablecoin after Tether. I don't really know the financials of Circle that closely. So if someone is interested in owning that stock, I don't know. But stable coins have to run on a blockchain, right? So Tether, USDT and USDC, they operate on top of an existing blockchain. And the majority of stable coins, over 60%, are operated on Ethereum. So Ethereum is where most of the stable coins are actually operating, and 36% of the fees for Ethereum today come from stablecoins. And
that's a lot.
There's a stat that was just published over the weekend, but in just the last 7 days, about 7 billion of stablecoins were created on Ethereum, which is greater than the amount of stablecoins on Solana over the past 5 years. So more stablecoins creations are taking place on Ethereum. So I'd say if you're betting on stablecoins, you should bet on Ethereum.
Yeah, it's like betting on Ethereum. Okay.
Yeah, and that's just tokenizing the dollar. Wall Street wants to tokenize the stock market, and they want to tokenize bonds. That tokenizing mechanism is the same essentially as tokenizing a dollar. So that's where Wall Street is, again, doing most of that work on Ethereum.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon. as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
So my friends thought Bitcoin was... So my friends that are in the financial business, they are the ones who missed Bitcoin. Because in 2017, their knowledge of the world is traditional stocks, traditional bonds. They didn't think crypto made any sense at all. So they were very skeptical of Bitcoin. And in fact, many ridiculed my views about it. Of course, now they acknowledge it was a great idea.
I think they'll regret it.
Yeah. But now when I tell my friends about Ethereum, my close friends still do the same thing. They're like, Ethereum, it hasn't done anything for 5 years. Why would I buy Ethereum now? So my closest friends are still very skeptical. The choice is really understanding that Ethereum is facing a positive innovation cycle that markets haven't yet recognized, because it's been for 5 years. It's been a chain that's been slowly improving, but now this is the moment.
So what's your general outlook for other different sectors?
Well, I'm still bullish on U.S. stocks in the final few months of 2025, because there's two things that are positive catalysts. The first is that the Fed is going to resume its cutting cycle. And we looked back. So if you look at the entire history of monetary policy, the Fed has never resumed a cutting cycle in the fall. So it's only happened 2 other times in history.
And you're expecting this year as well?
Yes. Yeah. It's the Fed has signaled. So this would be the 3rd time. The first time was 1998.
Yeah.
The second time was 2024. And this is the 3rd time. In all the 2 prior cases, the stock market boomed in the 4th quarter because the Fed has been on pause and then they're finally cutting. The second is that the business confidence, the ISM manufacturing, actually has been below 50 now for 29 months. It will probably recover back to 50 once the Fed starts cutting. That's the longest stretch of the ISM below 50 in history. So that's really good for industrials and financials and small caps. So I think that this fall is a really broadening of the stock market rally, where the banks and the industrials and the small caps are going to do as well as large cap tech. But I guess I just point out 2 things. One, when the Fed resumes its cutting cycle, they have a lot of room to cut rates further, because the Fed funds is at 4.5% right now, and inflation is probably closer to 2 or 2.5%. So it's the real interest rate is extremely tight. So I think there's a lot of room to cut. That will take a few years. I think this is really bullish for stocks. I think the most important message I would leave you is that when you think about whether it's stocks or crypto, you should understand that in the stock market, you really want to buy the best companies. That's why Tesla, Nvidia, Palantir, these are the strongest businesses, and they have trends that are not sensitive to the economy.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency. It's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology, and if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.